Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Sunday, June 16th, the year 2019. Let's talk trading. But first, it's Father's Day, so happy Father's Day to all the traders out there who are fathers. Hope you had a nice, fun day and somebody wished you a happy Father's Day. So we're ready for the weekly opening gap. But as you all know, we're going into the third trading week of the month. And we have to make sure every trade we have our risk and money management in place. So, weekly opening gap. Most of the gaps have filled. We still have 1, 2, 3, 4 gaps that haven't filled yet. One thing I added to this screen, the purple dot, that's the pivot dot. Usually on weekly and daily, you see me have the previous midpoint, but I thought I'd put the pivot on the weekly just so you can see if you fade the pivot, how many times price usually hits the pivot. Of course, we see it on the other screen, but I'm not always showing that screen since we're kind of going through different systems, different methods, different ideas. So, but this is just a visual presentation, and if you're wondering, it's the TRO mid dots indicator here. And so you just say show pivot true, show boxes true, you turn off the previous midpoint, and there you have it. So we're going to look to see if price can make it to that 122.129 and maybe even more. Maybe it'll come out and it's already come out of the lower weekly wick zone, so you wick zone traders were rewarded once again. On the daily, the month is green, the week and day are green so far, but we're still 355 pips below the yearly open. And then as you can see right here where we have the magenta dots, previous mid, we've already hit the previous day's midpoint. Now here's the trading range for the first day of the month right here. You see we dipped down into it, we opened inside it, and then we exited. So people taking that opening range for the month breakout are now about 20 pips ahead. And the only monthly open we are above for the last 12 months is the June monthly open. And you can see here, as far as the ranges, we broke out of the opening day range here for June. We saw that also on the other chart. And the inside bar you see is 15 days ago, but it definitely paid off just last week, both to the upside and to the downside. So right now we've got a couple here, inside bars to take a look at, fresh inside bars. Now in the week we got the Euro USD, and we also have the dollar franc, which is also a monthly inside bar from last month, and Australian New Zealand dollar and Euro Swiss franc inside bars last month. And for those of you just tuning in, if you see the blue, that's the alert color here, and the gray means that price is actually in the inside bar, so you might want to trade the breakout of the inside bars high and low. Moving on, you can see here no ranges over 100 so far today, and we're about almost 6 hours, almost 7 hours into the day. About 30, let's see, 40 pip range so far. So knowing that there's no rat zone trades as of yet, we've got the weekly H1 highest open right here, and the daily H1 lowest open here, H1 in the weekly, H1 lowest open here. And so we'll see how those play out for the rest of the day and the rest of the week. Buy zone traders were rewarded, pivot point above the buy zone, so we had a definite strong trigger. We also had a missed pivot up here. So those who took that entry, even if you took it during the first hour, your stops shouldn't have been threatened. You hit the pivot point, and either you took profit or maybe you're holding on looking for more. Once again, the rat zone, not enough separation between the zones, so we wait. Pivot, as you can see here, took out the daily. There's the weekly. We've already gone up and through the monthly, but just so you know, we might get a fade back to the 122 about, say, call it 122.4 monthly, and the weekly, call it 122.13. So look maybe for at least maybe the weekly pivot to be hit this week. Might even take out the monthly. We'll just have to wait and see what happens. Not predicting, just showing. So here we go. We've got 2 missed pivots this month, 2 from last month, and 1 from April. So we scrunch the chart down. We can see all those missed pivots. As you can see, we're below them because it's red. Price action started off the day with a 3 ball. You know what to do. Green at the line. Price opens in between 2 lines. It's not going to stay in there most likely. Here's an exception. This one was just above the line, but it didn't stay in it, crossed below. So just for you scalpers or just traders want to just go in and have a very simple system, simple method, there you go. Wick zone. Here we go. We opened below it, entered, and out. Good for about 30 pips or more if you took that trade. Just take your money off the table. You can see here, once again, this was the top of the lower wick zone. Simple, simple, simple trade. As far as the tick chart, it's midnight in New York. Not much happening. It's just kind of going sideways. And here you see we had a short trigger. We just had another one. Larry live trade, Randy real time. And just looking at the highs and lows over the last 24 bars, just to get an idea which way is price moving. Is it taking out highs or lows? The open, see, we're above the Australian Open, we're above the Tokyo Open. Look like price is heading back towards it though. Going the wrong way on the charts. And the daily and weekly range is the same because we're still on the first trading day of the week. But just so you can see the idea where the weekly ATR zones are here in blue and the daily here in brown or saddle. I forget what color I used. But you can see from the open, it did hit the ATR 12, or half of it, ATR 12 times 0.5, so that's half the distance. So price has already ranged that. So a lot of times, if you can get half that ATR range, if you enter, that's a good place to take off some profit right there. And on the weekly zone trade, weekly buy zone, same as the daily on the first day of the week, but we just keep this zone for the entire week. And remember, if price comes down, you can trade the weekly open cross. And a lot of times, there's a lot of pips to be had. So you can pile up the pips. I don't believe I got any questions over the weekend. Oh yeah, but there is. I guess I did get a question, but I didn't get a chance to answer it on Facebook. A trader was asking, was another trader going to be allowed to post squiggly lines? Now let me say two things, maybe three. Squiggly lines. If you post squiggly lines somewhere where I post, I am going to rib you to death. That's just my sense of humor. Each trader gets to do whatever they want to do. So don't take it the wrong way. But the main reason I was telling you to remove the lines from your chart is you seem to be wanting to learn the wick zone. If you want to learn something new, you have to let go of the old. As Bruce Lee would say, you have to empty your cup. And so all those squiggly lines do is serve as a distraction. Get rid of them. Learn the method. Master the method. Then after you master it, if you want to put the squiggly lines on there, you go right ahead. But I'll just tease you about them. So yeah, he can post his squiggly lines mainly because he's kind of showing what he's doing. He's not, and it doesn't have anything to do with what I'm doing. He's doing his own thing. Um, and so, it's not like I'm going to be the squiggly line police. It's just I'm going to tease you about them. Because to me, if you put something on your chart and it draws a squiggly line, then you change the chart period and it draws a different squiggly line, I mean, you're just fooling yourself. Because if the moving average says the trend is up on one and the moving average says the trend is down on the other, I mean, who do you believe? You're just, in my opinion, you're just fooling yourself. I mean, the only true chart, I've said it over and over, is the tick chart, because this shows, and anything else is data compression. You say, well, we'll take all the ticks within a minute and we'll form a candle. We'll take all the ticks within an hour, we'll form a candle. Or all the ticks within a day, we'll form a candle. Or all the ticks within a week. It's just how much you want to compress that data. But, people seem to forget that the map is not the territory. So the chart isn't really the instrument. You have to understand that. And the price of the instrument varies. And so if you look at a chart, it's data compression. It's how you sliced it up. Somebody else can look at the same data a different way. And that's why I like to use horizontal lines, because it doesn't matter who you are. This is the daily open, this or from the previous day. This is the high from the previous day. It doesn't matter what time frame. It doesn't matter. And that's just one of the things I try to get traders to understand, because once you get it, it's going to hit you like a ton of bricks. The light bulb's going off and you're going to go, I see what you mean. And then you'll probably get rid of all those squiggly lines. Because, I can look at a chart, you not even look at the lines, but it's like, oh, look, we put in a bottom. There's a bear candle followed by a bull candle. Okay, well, that's a turn. So let's see. Let's see if price goes up from there. And look what happens. Same here. Here's a bull candle followed by a bear. Okay, let's see if price goes down. And anytime you get those extreme highs and lows, and you can look at them like this, you can go, okay, yeah, there's a good possibility this thing could turn up. I mean, look what happened here before. You look over here at that same level. It's like, yeah, look what happened. It hit here, and it came all the way up to here, and it went all the way down to here, and all the way back up to there. So there must be something about this area. So it's like, okay, yeah, I'll take my chances. It's not a crystal ball, but, every move reversal has to have this candle pattern. A bear candle followed by a bull on the downside, and a bull candle followed by a bear candle on the upside. You can't show me one where that's not true. It's just that simple. So anyway, fellow traders, as you continue trading this month, just keep in mind it's not what you trade, it's how you trade it. So let's continue draining the banks.